So you want to get rich, and you've heard about index fund investing. Well, today in this video, I'm going to tell you everything that you need to know about index funds and if they can actually make you rich. Hey, I'm Zach, and welcome to On Cash Flow. We're going to go over a few things, including what really does rich mean, being rich mean, what does that mean? Because that's really important to define. If you want to get rich, you have to know what getting rich actually means. All right, and we're going to define what an index fund is. I'm not trying to insult your intelligence, but we'll just really quickly go over basically what an index fund is, how you can invest in it, and if it can actually get you rich. So let's first start by talking about what exactly rich is. Because if you asked a million different people about what it means to be rich, you're going to probably get a million different answers. So in reality, there is no one way to define what rich is. If you look it up in the dictionary, it's going to say something about accumulating a lot of wealth, and probably you'll see the word excess wealth in there as well. So if you actually want to get rich, you're going to have to first define what rich means to you. Okay? Now, what I am going to define rich as might be something differently than what you define rich as. When I'm talking about getting rich, I define being rich as being independently wealthy. And that also means being financially independent. And basically, if you're financially independent, if you're independently wealthy, aka, in my opinion, in my definition of rich, you can live off of your money or live off of your assets rather than having to rely on income from work. So for the definition of this video, for my personal definition of being rich, I define it as being able to live off of your assets and not have to rely off of work income. So if you can survive or really, thrive without having to work for a living, basically, then I would consider you rich. Now, there are many different ways that you can find ways to do that. You can go live off grid, live off the land, whatever. Are you considered rich? Maybe, maybe not. But if you have enough money to basically where you live like a normal life in society and you don't have to work for a living, then I consider you to be rich in most cases. So that's how I'm going to define it in here. Hopefully you define it as some kind of similar way. Maybe your definition is vastly different. That is okay. But really what we're focused on today is index funds and if they can get you to that level. And speaking of index funds, let's first define what they are really quick, just so we're all on the same page here. So index funds, really dumbed down, like really simply explained, they are mutual funds that specifically track a market index. So when you think of a market index, what do you think of? You think of the Dow Jones Industrial, you think of the S&P 500, there are a few other ones you might be thinking of, but basically this mutual fund tracks that index and tries to basically mimic what that index is. So when you hear someone saying, the market is down 10% today, the market is up 20% today, if you compare that to a mutual fund that is tracking that index, that mutual fund should be really closely to mimic that index. So if you're invested in an index fund that tracks that index, then your investments are going to follow pretty much that index that you're invested in. And probably the most popular one that people invest in is the S&P 500 or the Dow Jones, which is why I mentioned them. Now, index funds can also fall under exchange traded funds or ETFs. So really basically summed up what those are is like a mutual fund that trades kind of like a stock. Mutual fund shares don't actually change in price every day or every hour like a stock would during the market time, during trading times, but an ETF does. So it's kind of similar. An ETF can also track a market index, and so sometimes when people refer to index funds, they kind of also refer to ETFs, but mostly when you're talking about it, you're talking about a mutual fund that tracks a market index. So now that we're all on the same page of what getting rich means and what index funds are, let's talk about if index funds can actually get you rich. So can they actually get you rich? And my answer to that is yes. Index funds can make you very wealthy and they can make you rich. But honestly, it's not going to be quick, it's not going to be fast, this is not a get-rich-quick scheme or anything like that. It is going to take either a lot of time, a lot of money, or a lot of both. Let me really quick put up a market index known as the S&P 500. So this is the S&P 500 since its inception, basically how it's done over the course of its lifetime. And if you invested in a mutual fund that tracked this S&P 500 basically since the beginning, your average return is going to be close to 10%. If you just invested in the S&P 500 over the long time, it's generally expected you'll get anywhere, from like 7 to 10% in the future if you go off of what the past has indicated. 10% is a pretty good return on your investment, right, over a long period of time. But it's not going to make you insanely rich. You're going to actually have to own a lot of shares of that S&P 500 or of really any index in order to allow it to grow to such a large number. And that's why you can actually get rich off of index funds, but it's not going to be anything quick. So when you're investing in index funds, usually you're going to be following a method known as dollar cost averaging. And that is where you invest, maybe a certain amount of money or as much money as you can every single month or on a very scheduled time basis, so that you're continually investing and continually buying more shares of the index. I'll just keep using the S&P 500 just as the example. So you keep investing in the S&P 500, maybe every month after you get your paycheck and then you've paid off all your expenses and things like that. So you invest the rest of your money into that index fund. And over a long period of time, compound interest is going to work its magic, and it's actually going to make you extremely rich. So in the beginning, the first couple of years, while you're contributing and buying more shares of the S&P 500, a majority of your wealth is going to be built off of the actual money that you invested. Whereas if you look over a longer time horizon, such as 30 years, and I'll throw up another chart on that, you can see that your contributions are going to remain somewhat steady. Even if they do remain somewhat steady, the amount of wealth that is going to grow pretty much exponentially. And the more time you have to grow, the more exponential it's going to be. So what that means is the faster it's going to grow, the more that compound interest is going to work its magic over a long period of time. So even getting an average return of 7 to 10% over a long period of time can make you quite wealthy, especially if you are continually buying shares, you're continually investing, or even if you just have a lot of money to invest, all at once, and it grew an average of 10% per year. If you know anything about the stock market, you know that the index funds or stocks in general don't just grow 10% every year, at a continual 10% return. No, it's a lot more of a roller coaster ride than that. Which I showed you that chart earlier. I'll put it up one more time just to check it out again. You can see that stocks go up and down, but if you take the average of all those returns, then it's going to be close to 10%. Well, in the case of the S&P 500, and it might be similar or whatever. You can take a look at historical returns of other market indexes and see what you can kind of expect for the future. Looking at past returns definitely does not guarantee future returns. There's no doubt about that. But really, it's kind of the best thing, the best metric that we have to look at. So when a lot of people are, basing their wealth and basing their retirement and things like that off of the S&P 500 or off of an index fund, they do look back at historical returns. That's kind of all we have to look at. But usually, if you kind of be conservative with those estimates. Maybe you don't say, I don't think I'm going to earn 10% average like it has done in the past. But maybe, I can earn closer to 7%. And then if you subtract out an average inflation rate of 3%, which has kind of been the average over the history of the U.S. since inflation began being tracked, then you can say, okay, I have that 7%, subtract that 3%, and then I have a 4% real return over the long haul. That's actually good enough to get you quite wealthy and make you quite rich. But again, it's not going to happen overnight, especially if your strategy is investing in index funds. It's definitely not going to happen overnight. It's definitely might not even happen in 5 to 10 years. It might take a long time. And the longer it's going to take, the less that you can contribute to yourself. So compound interest is going to work its magic over the long time. But like I said before, it does need a long time in order to work, exponentially. In the beginning, if you want to get rich in, say, 10 years, most of your wealth is going to be built off of the money that you actually contribute to your investments when you're assuming these average returns. So really, if you want to get rich with index funds, you need to know that it is a get rich slowly strategy. And really, that's all what I'm about. That's all what On Cashflow, that this YouTube channel is about. It's about getting rich, but it's about doing it smartly, because pretty much anyone can do this. You can learn a lot of the basics when it comes to investing, saving money, saving on taxes, things like that. It's really easy to just learn all these basics, and you can become, pretty wealthy just by doing that. And it doesn't take anything crazy or anything out of the ordinary for you to actually gain wealth and get rich off of this kind of strategy. Which is why, if you are enjoying this video, I would really appreciate it. Just give me a like on this video if you're enjoying this information, and consider subscribing to the channel, because like I said, I'm talking about this kind of stuff all the time. Right now I'm putting out videos every Tuesdays and Thursdays at 3 p.m. Pacific Standard Time. I'm talking about saving money on taxes. I talk about saving money in general. I talk about investing like I am now. I just talk about all kinds of different things, and I focus on gaining wealth, especially very quickly, but through this method. So it's not going to be overnight. It might be over, a span of 10 to 20 years, but you can get quite wealthy. And I think if you subscribe to this channel, you can definitely, speed that up, because I'm going to give you all that information that you need, because I'm on this journey too, and I want you to join me on the journey. So let's get back to the index funds. Now, if you want to get rich using those index funds, like I said, the longer time that you have, the better and the easier it's going to be. Otherwise, if you want to do it in a shorter period of time, over say 10 years versus 30 years, you're going to need to contribute more to these index funds, which means you're going to have to buy more, because the more shares that you have of a mutual fund that tracks an index, the faster you are going to get richer. And the reason why a lot of people tout index funds, myself included, is because they have good track records. These indexes have good track records of pretty decent returns, while at the same time, versus regular actively managed mutual funds, index funds, they tend to be kind of automatic. Your fees tend to be much lower, quite exponentially lower actually, because a mutual fund that is actively managed, it could actually cost 1% per year to just operate that fund and pay the active manager and all the people behind it. Whereas an index fund is kind of computer-based, it's kind of automatic, it just tracks the index, doesn't really require any turnover or any active involvement in managing that fund. And so the index fund fees are usually extremely low, and pretty much just to pay for that index, for using their index. Pretty much the owner of that index, whoever created that index, that's usually what the fees are going to. And they're usually very, very small, exponentially smaller than an actively managed fund. So what does that mean for you? That means that the same amount of return for an active fund and an index fund, you're going to get more out of the index fund because less of your return went towards fees, and you can still get quite a good return. While at the same time, index funds tend to be extremely tax-friendly because there is low turnover, and turnover means buying and selling of different assets within the fund. Because they don't do that very much with an index fund, because the index funds usually, the indexes don't change that often, it's going to be a lot more tax-friendly, because there's a lot less buying and selling going on, and that's a lot less triggering of income taxes that you would have to pay on any kind of gain or any kind of dividend and things like that. So versus a mutual fund that is actively managed, usually you're going to have a lot higher of a turnover, which means there's going to be a lot of short-term capital gains. There's going to be a lot of long-term capital gains when you didn't want to kind of take those capital gains. There's going to be a lot more dividends possibly. It just depends on the fund. But generally speaking, a good index fund, such as the S&P 500 or even a total market fund, it's going to have a lot lower turnover, and therefore you'll essentially pay a lot less taxes if it is in fact invested in, like, say, a taxable investment account. So really what I really want you to take away from this video is that index funds definitely can make you rich. It's not going to happen overnight, and it's not going to be easy. But it is kind of almost a foolproof way of acquiring a very good amount of wealth that pretty much anyone with some extra income to invest can do. When it comes to actually being rich, you need to define what rich means to you. So I used rich as financial independence. And speaking of financial independence, I made a really good video on financial independence and how you can do it in 10 years or less. It's a little bit longer of a video, but it is packed full of such good information that I think that if you're watching this video, it is definitely going to be a good fit for you. So I'm going to go ahead and post it right here. It should pop up right now. Please check out that video. It is about financial independence and how you can achieve it in 10 years. And if you like this video, don't forget to like and subscribe to the channel. I'm Zach from OnCashflow.com, and I hope to see you next time.